Hey guys, welcome back. Yassine here. Let's see what happened this week. Looking at the QQQ, two moving average, not making it too complicated. So let's jump in and started looking at the bigger picture and where we at. So starting on the weekly time frame, we're still above all the moving averages. So that's an uptrend. Okay. Uh, Swinging it back to the monthly, we're still above the moving averages, and then we have a cup and a handle in the making. So we have a handle in the making here, right here. So that's monthly. So we're bullish on the monthly, bullish on the weekly, and moving to the daily time frame. We saw that after I discussed this last week, we said that we did actually make a follow through day on October the 6th with above moving average, as you can see down here in the bottom. And I think this day we made over 1%. As it's a rule to identify follow through day. So the key here is we need to not violate that follow through day rule, which means that we should not be coming back here and then closing below it. If that happens, this follow through day is not valid anymore, and then most likely the market will go down and we'll see lower prices. So that's what I'm actually watching. So and you can see that most actually the SMH and the Nasdaq here did about the same thing. Which actually got rejected on the 50 moving average, the red line. So I'm gonna be like I always say, I'm keeping it day by day, and then I'll be watching the low of the 10/6 as a to see if it's gonna be if we're gonna close below it or not. That's about it. And if you can see that gold, if you're following gold, I just want to mention this. I always urge you to look at biggest time frame to see what's going on. So if I just show you this, it's like a bunch of lines and bunch of candles that almost doesn't mean nothing. Switching it to the monthly time frame, we'll see that we have a huge cup and a handle here. The gold tested this price and adjusted back here and tested it back here and tested it back here. So that's your resistance line right here. And then we've been in a handle making for over, I think that's over 3 years. Yeah, it's about almost 3 years. Yeah. Look how we actually went up here. Let me just show you in a bit. I went up from the bottom here all the way up, and then we kind of consolidated sideways in here, and look how we did actually consolidate it. We consolidated. So you're looking at this candlestick, for example, and most of the time I'll be watching those breakout and breakdown candles as the high and the lows to see if we're gonna violate those candles. And what I mean by violates is like either closing on the top or closing on the bottom. And then look how we've been digesting. So every time you actually have a move to the upside or the lower side, you can have some type of consolidation, which actually makes the flag. And you can make that on the lower side. So this is a flag on the upper side, right? So you can see consolidation going sideways, or you can see actually consolidation going this way without violating the law of that of the pole. So it might come down all the way down here, but you're not gonna actually, if it does close below here, that means this flag is not it's not a flag anymore. And then usually if you consolidate, and then you will have an upper move to the upside. Same thing, you can flip this pattern to the lower side when we have a down movement, and you will consolidate sideways and you have a flag, but the same thing. Or you can have a flag, I mean not a flag, but almost digesting going to the upside. So you have a, or you can call it a dead cat bounce. So you have a down movement, and then you have a digestion going to the upside. And this actually these days will try to test the high of that breakdown candle, and then you'll see a down movement this way. So So that's what I'm seeing here on the monthly time frame. It's not a rocket science. You can identify it. So it's a gap on a handle. So as far as the monthly time frame, so I mean it's still October the 15th, so it's half of the way. But looking at the weekly, it's still, I mean, I wouldn't say it's bullish. It's acting bullish, but it's in digestion mode. As I was gonna discuss something else. But let me finish talking about other indexes, and I will jump to it. So this is gold, composite, Nasdaq acting about the same things. We are actually in digestion right in here, since we closed below that last low here, and I did actually mention this last time. So I'm talking about this low here, and we did violate it here. As of my rules and from my previous trading experience, every time you have an uptrend and then up higher highs and higher lows, every time actually the market comes down and closes below that last low, usually after that the cycle is over of that uptrend, and then the market will just gonna go sideways. It'll be chop chop. So that's what we're seeing right now. We're seeing chop chop. Hopefully we're making a handle here until the market said otherwise. So switching it to the weekly, you'll see that and on the composite here, we kind of close below the 21 moving average. But going back to the QQQ, we're using that 21 moving average as a support. Looking back here to the left, look what happened most of the time. This is, I'm talking about 80% of the time out of 20. So 80% of the time what happened, 20% of the time what happened. There's no such thing as black and white in the stock market. That's why sometimes breakout, I do trade breakouts and pullbacks, and sometimes breakout, they do happen, sometimes they fail. There's nothing, there's no such thing that the rule is always going to happen. And I think you do agree with me. So looking back here, on the previous chart that we used that 21 moving average, don't forget on the weekly time frame as a support. And that's what I was been watching. QQQ is actually acting really as strong comparing to the Nasdaq, comparing to the Dow Jones. Everything is below that 21 moving average. IWM is even worse. And SMH as well. SMH did close below it, but it came back. But QQQ so far, so Dow Jones same thing, SPY is about the same thing, but QQQ so far, it's the only one that actually holding on the weekly time frame above it. That's active bullishness. Until if we started to close below the 21 moving average, that's going to be a really bad sign as far as I'm concerned. So that's my 2 cents in the market. That's what I really want to discuss to you, and then what I just want to tell you that I'm watching the follow through day to see if we're gonna like just come back a little bit here and bounce back up here, or consolidate so we can make that handle here of that cup and a handle here, or if we're gonna actually come back down, and that follow through day actually will be invalid. And what I mean by invalid is closing below it, and that actually will not be a good sign. So that's what I'm thinking so far, and I do trade QQQs. One thing I'll tell you that I just want to inform you, and then tell you about my experiences. That's actually what I'm doing in this channel. I'm trying to help you as much as I can, share with you my experiences in the stock market. I've been a swing trader for a while, and then I'm trying to make it as when I explain something to you, I'm trying to make it as simple as possible. So then this is the example I want to give you. For example, like if you put in too much rules and trading stock, I think you're gonna make it hard on yourself. For example, so for example, looking at Nvidia stock here, for example, looking at it on the weekly. So of course you need to have, if you want to be a successful trader, I think discipline is one of the most, discipline and risk management and waiting for the right opportunity. These are simple, overlooked at ingredients that a lot of people they think they think, I mean, they do think it's important, but they overlooked at it, so they don't really give it that, they don't really think it's that important, they don't take it in consideration the way it's supposed to be. So looking at the chart, so first of all, you need to be good at reading chart. When I mean by reading good at chart, you be able to know what's your support, what's your resistance, And then you need to know also your market cycles. You know that there is going to be cycles, like for example here, let me show you something here. I was going to show you actually a picture of a stock market where you have accumulation, so that's the phase one. Then you have up markup, which is an uptrend, that's phase two. And then when the market's starting to stop going higher, that's where which is phase three, that's where distribution will start. And then phase four is when the market's starting to go down. So this is actually a basic when you you should train your eyes to actually pick up this thing when you look at any given stock. For example, looking at Nvidia here, you'll notice that. So looking at it on a bigger time frame, that's why I always tell you, like, look at the chart on at least on the weekly and the monthly, so you can see what's happening. What phase are we? Are we in an accumulation phase? Are we in an uptrend? So looking at it here, you see that you see that the Nvidia was like consolidating for long, and as you may know, the longer you have a base, as they say, the higher it will fly. So the first thing, you just want to identify where the market is going up and then getting rejected. So it got kind of rejected here, and remember, this is not going to be like when you try to identify support and resistance, it's going to be an area. It's not going to be like a specific point. So do that. Train your eyes, and then you will be able to identify your support and resistance. And then so this will be like your accumulation phase, which is what I just showed you as here, accumulation phase. Let me just make it a little bit smaller so you can follow with me. So that will be right in here, accumulation. Then if you're a breakout person, you can start buying breakouts, or you can buy it way before in here. So that's up to you. That's a whole different level of discussion. And then after that, you have to be able to identify second phase, which is like uptrending here. And then you can really use a single like a one indicator as a, for example, a 21 moving average or 20 moving exponential moving average as your guiding tool. And then so that will be, yeah, that will be your second phase. Because you might ask me, oh, how am I going to know this is like, how am I going to know this is the end of the trend, or the market, or does that stock is going to keep going higher? Well, like I said, as soon as it started violating like it did actually here, and it started actually to do it in here, you'll know that we're getting closer to the end of the trend. Plus, you'll see that the stock is not going to keep going up forever. So from here to here, from that breakout point, the stock moved 438%. I mean, that's a great gain. But so this is another tool that you'll tell yourself while you're analyzing the chart, that hey, we've been making a lot of progress. So probably the stock is going to hit sooner or later, it's going to hit the end of that trend. It's going to start to correct. So so to summarize, we have a breakout point, we have accumulation phase here. So this is number one, and then this is two. Like I'm gonna show you back here. So that's the second phase markup, and then you have distribution, which is up here, phase three, and actually you can see that the market's starting to stall. I mean, what I mean by stall is like the market try to go up higher, but it just get rejected. So that shows you these are bigger signs. Even like when you get advanced in reading chart, you'll notice that you will tell yourself, like during analyzing the chart, like okay, we moved over 400%, and then you're starting to see like pickups on volume on like down here. You start to see market starting to not making any more new highs, and then bigger bars of volume starting to accumulate. Every time we try to make a higher, we get rejected. So we got rejected here, we got rejected here, and this actually one here, it's really big. And you can see market stopped to making new highs, like I said before. And then you will see violation of that moving average, whatever you follow. Either you follow the 21 moving average exponential, or the 20 simple moving average, or your 50 moving average. Okay, so these are like simple tools so you can follow the trend. But like I say, you have to be able to pick up, you have to train your eyes, which actually takes time. So you have to put time and dedication and discipline, so you'll be able to read it. And then after that, phase four, which is actually, let me go back. Phase four is the markdown. This is where we're starting to break down, and then market will turn bearish, the whole stock market, and usually okay, leaders will start to break down before even the market started to break down. So you start, so if you're positioned in a leader and then it stops to make new highs and started to break down and closing below certain moving averages with huge bars of volume, we're like, okay, probably this is the end of the cycle, and then we're going to start to correct. That's where we go, you pull up, and you hopefully by that time you already took a lot of profits along the way. And this is another lesson again where you can divide your position into threes. Like as soon as as soon that your stop goes up 20%, you take first half, and then you can take the other half when that stock starting to close and violates that moving average. Okay, and then as you can see here that we went down for quite a while, for let's see, for I don't know, God long, for about like 2.8 months, and then you will be able, for in this example, for example, like the stock wanted to even push higher, and then here you can you'll be while you're training, you'll be able to recognize what's bullish and what's not. So here, for example, you can see that we went up sideways, and then we kind of put a flag, huge breakout candle. Look how we consolidate, like I said before, in these two. We're looking at the weekly. Look how we consolidated sideways, like I just explained to you, and then we never closed actually below that breakout candle down here. So from here, you looking at this, you'll recognize that, oh, the stock market wants to continue higher, and then you'll pick up and start maybe buying a little bit more by here, and then put your stop loss to 7-8% or even below that if you want. So, and then you can follow the stock until like it actually stops going higher. All right, so that's actually what I want to share with you, and I just want to tell you that the market is kind of like what it really requires is not, it's just discipline and be able to recognize what's going on around you, what stocks are you trading and you're positioning, and there's a lot of bunch ingredients like you have to be able to digest, and you have to have it marinated in your brain before you start really making money. Most of it is actually emotionals, and it's actually your ego, and that's one of the biggest one that I actually encountered during my trading journey. So and as you can see here that the market, that Nvidia actually pushed even higher, but at the end that big of a cycle just came down here. You can see, like, you can call this as a phase 4, but it just so you can still like trade this if you want. It's just gonna be choppy. It's not gonna be that easy. Look how clean it was down from here all the way to the left, and then you can see that phase 4 down here, and then you can see that we started again. Once that phase 4 started, the whole journey will start all over again. When the Nvidia bottomed, then you can see it on a bigger time frame. You can see kind of type of accumulation down here, breakout in here, and then the whole thing started all over again. You see it. And always, like, if you're a swing trader like me, always pay attention to those long consolidations, because those long consolidations will tell you a lot. And then from there you can start to learn different patterns, like a cup and a handle. And then the most of it, what I actually do like, is when the stock's starting to get tight. So you can see from the top here all the way down, you can see how much volatility used to be, and then as the stock is starting to get closer to the breakout point, that distance, look at the distance from here to here, how long it used to be, and then comparing to here is almost half time. That tells you that the buyers actually started buying here. They're not letting the stock to drop down, which tells you like they are interested in that stock. And then the moment of truth, it will start breakout. Of course, you're going to be looking at the fundamentals. If you want a good stock, you have to look at the fundamental side too. You have to have some good earnings, good sales, good revenue. So once you find that, along with the market has to be in a good bull market cycle, that's when actually when everything comes together, and that's when you everything starting to make sense, and the whole thing's going to start all over again. All right, so I hope this helped you. If you want more videos like this, just let me know in the comments. Subscribe so we can have a huge family. And then like I said, subscribe if you find value in the stock. I always say in the stock, in this video. And then I hope to see you soon. Bye bye. Take care.